Thank you for tuning in to another edition of the Vulcan Report with yours truly, the Algo Capitalist. Today is Wednesday, April the 25th, 2018. Time is moving quick. Hump day is done. Jumping right into the thick of things, we got a pulse wave buy that we have been holding in the QID, which is the short NASDAQ 100. As you can see here on the bottom left hand side of the screen, market did make a powerful post wave breakout on the daily chart, and we have since formed a nice little pointer here on the daily chart as well on the 4-hour chart. And after hours, the market is pulling back as the NASDAQ 100 is bouncing. It's up about 38 points right now. Dow futures up 29. So you can see how the market's getting a little back and fill action here. All right, so that's basically what's happening. All right, so moving right along here, you can see on the future side, I'll pull up the NASDAQ 100. All right, on the weekly chart, still, this is a do or die week, depending on how this market moves. It's running dangerously close to rolling over. This is a very critical juncture. The market could bounce here and rally, or it could continue to fall down. We do have a pointer back here that we cannot ignore. This is a significant pointer on the weekly chart that we cannot ignore. All right. This pointer has to be dealt with at some point. All right. This one is the first significant one that has not been taken out yet. These are secondaries. They're canceled out by the big one here. All right, so we got to look to this pointer right here. Big issue. Market has a lot of overhead resistance to deal with. So I know that there was some issues today with Google stock and I think maybe Facebook it was, one of the two. Anyhow, there were some issues over at the NASDAQ with that. So don't know if they finally got that squared away or not. But as it stands, this is where we are on the weekly chart. Nonetheless, if we pull up the daily chart, you can see for all intents and purposes, the market does not appear to be in any kind of rally mode. So it looks like the pointer is going to play out. All right. So here you are on that daily chart. I'll blow it up a little bit more so you can see it. All right. Momentum is down. Trend lines and prices below the Kumo cloud. Much overhead resistance here on the NASDAQ 100 futures, as you can see. Very strong, powerful resistance. Downtrend channel is still intact. All right, so this technical bounce rally back to the momentum line is where we should see sellers re-enter the market and taketh it down again. So holding here, we'll see what happens going forward. Taking a look at the Dow, sticking with the daily time frame, same thing, a little bit more pronounced, further detached from the Kumo cloud. Downtrend channel is still intact. Strong overhead resistance on the daily chart on the Dow. All right, take a look at bonds, which have been in a bear market for a while, hitting new lows, 141.17, and it looks like we're starting. It's already locked in. It looks like it's about to put another leg down. Expect those interest rates, as you know, to move higher. I told you guys a few days ago that those of you in the mortgage game, if you were buying a house or refinancing a house, that now was the time to go ahead and lock those rates in because they're going to be edging higher. And sure enough, here the market is. All right, so ignore these alerts at your own peril. Taking a look at crude oil on the daily chart, you can see still clinging to the positive momentum, and the chart Everything on the chart is still technically bullish. Looking at gold. All right, gold slipping. The downtrend channel is intact. All right, it's starting to accelerate to the downside. Momentum picking up to the downside on the gold futures. Silver is starting the process of a downtrend channel. So it's getting ready to extend and stands in jeopardy of falling below the Kumo cloud. The price action does. So everything is looking kind of bearish here, with the exception of the US dollar, which has strengthened these last few trading sessions and looks to be breaking out. Wants to probably come up here and test that 92. Wants to run up to that 92. We pull up the weekly chart on the US dollar. You do see what I've been telling you all along on the US dollar. What did I tell you? It's going to make a run up here to this trend line. That's what it did. Then I said, depending on how it behaves, how it closes here, it's going to try to make a run for the 92 handle. I did tell you that. All right. The president's policy is between 89 and 91. We're within that middle zone now. So this is doing what he needs it to do. All right. It is what it is, folks. You can't fight the trend. You can't fight the tape. You got to go with what you see. This is a technical play bounce off of these lows. This is an extreme low. When you get into the 88 handle, that's an extreme low. All right, that's a red alert low. You get into this gray zone. All right, it's red alert once you get into 88. All right, don't like to see that. Okay, so market's trying to recover. It's been straight down for quite some time, months. All right, so now it's trying to fix itself a little bit. All right, so it makes sense. All right, so that's pretty much what's happening right here, right now. We take it day by day, trade what the market gives us. All right, watch those rally and crash alerts closely because they do give off clues to where the markets may be headed. It does appear that the markets are a little psycho right now, up one day, down the next day, and flip-flopping all over the place. And markets tend to do that at extreme turning points and junctures within the market. All right. And for the market's failure to rally when it should be rallying tells you everything you need to know. All right. The bull is struggling. It's on life support. All right. And it looks like the equity markets want to roll over. I mean, big time, where the weekly chart starts to look like the daily chart I showed you. All right. So for all intents and purposes, the complexion is still bullish, but it's barely bullish. All right. When you get down to an extended correction phase, like you've seen in the equity market, we've been in this extended correction phase. It tends to gather momentum, and then you can get trend changes. So you have to be very mindful of that. All right. It doesn't appear that the correction is over. Okay. Just saying. Watch your volatility. Use the recommended stops. All right, use those price triggers wisely. Watch the post wave price triggers and trade with the momentum in your market, and you should be all right. And with that being said, remember postwavetrading.com. Come learn how to trade these markets. Take advantage of the free study course along with the 7-day free trial, and that's at postwavetrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.